£45,000. That's the average debt a UK graduate walks away with. Not a rumor, the official figure, and most people have no idea what happens to it next. This video fixes that. If you started uni in 2012 or later, you're already in repayment, or you will be soon. The deductions are happening quietly on your payslip. Do you actually know what you're paying and why? First things first, which plan are you on? Plan 2 covers England and Wales if you started between 2012 and 2022. Plan 5 covers England only from 2023 onwards. Different rules, different write-off dates, really matters. Here's the thing nobody says clearly enough. A student loan is not like a bank loan. It won't follow you to a debt collector. It won't tank your credit score. It behaves far more like a graduate tax. You only pay when you earn. There's a salary threshold, a minimum you must earn before a single penny gets taken. Plan 2 kicks in at £27,295 a year. Plan 5 kicks in slightly lower at £25,000. Below that, you pay nothing. Once you're above the threshold, 9% of everything above it goes toward your loan. Not 9% of your whole salary, just the bit above the threshold. Same rate on both plans. Let's make that real. Say you earn $32,000 a year. Subtract the Plan 2 threshold. That leaves about $4,700. 9% of that is just over £400 a year, roughly £35 a month off your payslip. Interest is where Plan 2 and Plan 5 really split apart. Plan 2 charges RPI, that's retail price inflation, plus up to 3% extra depending on earnings. Plan 5 only charges RPI, no extra percentage on top. That's a meaningful difference over decades. Both plans eventually write off whatever balance remains, but the timelines are very different. Plan 2 wipes the debt after 30 years. Plan 5 makes you wait 40. That extra decade is significant, especially with interest building the whole time. Right. How do you actually manage this? Step 1. Find your plan. Go to studentloanrepayment.co.uk and log in with your government gateway account. Your plan number and current balance are right there on your dashboard. Step 2. Check your balance, but don't panic at the number. Your balance will likely grow for years before it shrinks. That's normal. And crucially, unlike a credit card, it does not affect your credit score when you apply for a mortgage. Step 3. Learn to read your payslip. After tax and national insurance, you'll see a student loan line. That's the 9% deduction in action. It's automatic. HMRC handles it. You don't need to do anything. Just know it's there. Step 4. Decide whether to overpay. It might genuinely make sense if you're on Plan 2, earning well and on track to clear the debt within 30 years. But if you'll never realistically clear it, overpaying is throwing money away. The rest gets written off anyway. Step 5. Mortgage applications. Lenders will ask about your student loan. Be honest, they care about your monthly repayment amount, not the total balance. A £35 monthly repayment affects affordability very differently from a £45,000 debt. The biggest mistake people make? Chucking extra money at their loan because the balance feels frightening. The balance is not the point. Your student loan is not a credit card. Running the numbers properly before overpaying could save you thousands. If you take one thing from this, let it be this. You pay back based on what you earn, not on what you owe. The size of the number on the screen doesn't change your monthly repayment. That's what makes this unlike every other debt. One action. Right now. Log into studentloanrepayment.co.uk. Confirm your plan. Write down your balance and your write-off date. 5 minutes. And you'll finally know exactly what you're dealing with, which most graduates never do.